I don't need no comments from the peanut gallery in there. Okay, the cat. Okay. So I haven't finished grading all the papers yet. I got most of them graded. I will tell you that I just drew a blank on your first name. Emma, Michaela, and
Austin.
Austin. Thank you. Sorry about that.
No,
I was just telling Austin right before you ladies walked in. I said, Austin, you and Emma did your homework together, didn't you? And she said, yes. Michaela, were you part of the same group?
Yes.
Okay. I'm guessing you probably made the same mistake that they did then. If you guys did it together. All of your homework came out great except for the very last problem where you were figuring the cost per unit on the doing the feet for you know, how much did it cost per foot to spray the trees? And you used the right numbers, you just had them backwards.
Oh.
You guys divided the 3,500 feet by the cost, by the total expense, and it should have been the other way around. It's the total expense divided by how many times did you do it. It's a fairly common mistake. Okay, it happens, but I started to tell Austin, and then I thought, no, I might as well wait till you guys get there so you guys can all hear it together. Okay, but that is, you guys will find there are some very common mistakes that happen, and that's one of them. Just simply using the, you know, you got the right formula, you just got the numbers backwards. Okay, so just remember when you're doing cost per unit, it's always the total expense first divided by how many times did I do it. Okay. So did you guys have any questions? Did everything seem to go fairly well working on the homework?
There was a couple that we had to look up, like what the words meant.
Yeah.
Oh, okay.
Yeah. That the like wording one, and then where there had like a whole bunch of extra expenses that wouldn't be put into, I can't remember what cost. That threw us for a loop.
Yeah, so it was probably, you're probably talking about problem 1.5 where you were working on your cost of goods sold, and it gave you a whole bunch of things that you didn't need, right?
Yeah.
Yeah, see, and that's what I was saying. One of the biggest issues you guys will run into, at least what I've found, you know, across the time I've been teaching this class, is that in order to make you understand what the authors do in the book, is they throw a bunch of information at you, and you have to be able to go through and pick out what information you need. Now, I will tell you a trick that I've learned, and I pass this along if I'm tutoring with somebody, is when you get a big long laundry list of stuff like that, what I do, in fact, hang on just a second. Let me. Wrong button, David. If you guys will bear with me half a second, if I can pull this up. Oh.
So I can put those two things in the same.
Yeah. Just click with two fingers on the back screen. We can click on that folder.
Okay, let me see if I can share this real quick. Okay, do you guys see a spreadsheet up on the screen? Or are you guys just working off your laptops?
Okay.
I'll log into Teams.
Values for harmonics, H-E-R-N-E-M-E-N-T-I-C. I got so many things I gotta do.
All right, do you guys see this? Are you logged in?
Yep.
Okay, do you see the spreadsheet there?
Yep.
Okay, so what I do when I get a laundry list of those things, you know, where I have to decide which part of it needs to get used and which part of it doesn't, I literally will go down, and in this case, since we were solving for cost of goods sold, I just went over to the side and I said, not CGS, it's not cost of goods sold. So, because a maintenance website, that has nothing to do with the cost of the goods, right? It does have something to do with our total cost of doing business. Same thing with delivery expense. And you guys, I think I said this the other day, but just as a reminder, anytime through the course of this class, when you see delivery, remember delivery is always after the sell, which comes after. Because one of the exercises we're going to run into, they're going to talk about depreciation on a saw and depreciation on a truck, on a delivery truck. And it's all part, we're calculating the cost of goods manufactured. Well, if you're manufacturing furniture and you have a saw, then that saw is going to be part of the manufacturing process, but the delivery truck is not. So anytime you see delivery, just remember that delivery is always after the sell, so it doesn't get involved in our costing processes. But freight in we talked about was, and purchases was. Our ending inventory, if we have it in inventory, whether it's ending inventory or beginning inventory, it's all part of the calculation. Revenues is never going to be part of the cost. Revenues is the money you brought in. And in marketing expense, again, it's a cost and expense that we have to account for, but it's not part of our cost of goods sold. And the beginning, you guys got it all right, okay? But that's the way I do it when they give me a laundry list of stuff like that to figure out. Is I'll literally go in and I'll identify on that laundry list what works and what doesn't. So then when I go to plug it into my spreadsheet, it's a whole lot easier. Just the little tricks. Okay, now if I did that right, now you guys are seeing my slide, right? Yay! I figured out that. Well, like I said last time, they changed some things on us in the way that this Teams works, so I'm figuring it out now. All right, so week 2. Now that you guys have had a taste of this, now we're going to jump into it a little deeper. We're going to go from being ankle deep to being about knee deep today. Okay. So we have was it? I just drew a blank on the other phrase. Oh well, can't remember what the other. Okay, but we're going away from being like a period cost to now we're talking about costing, and by changing the slightly from cost to costing, it's a totally different subject matter now. Okay, so now we're trying to figure out the difference between job costs and process costs. So when we're talking about costing system, what we're doing is we're trying to gather all of those things together that we have to, in order to figure out our production for a cost per unit. Okay, it helps managers. If we don't know what a cost per unit is, we really can't figure out the right selling price in order to make the profit that we want to make. Things that go into we got to compute the cost of goods sold. That goes into our income statement. We're going to compute our cost of inventory. That's on our balance sheet. Okay. And then we look at, well, how are we going to assign these costing? And this is the big thrust of today's assignment. Are we going to do, is it a job order cost or is it a process cost? And the easiest way I can help you kind of understand the difference, and we'll get into it a little more in detail here in just a bit, but think of a company that makes plywood. Okay. You guys know how plywood is made by chance?
It's like pressed, right?
Yeah, what they literally do is they'll put a tree on a machine. One of them, the grain will be running this direction. The other one, the grain will be running this direction. And by doing that, it actually makes it stronger than the wood was as solid wood. Okay, but there's a process to doing that. And when they do it, they're not just making 1 or 2 sheets, they're making thousands of sheets. And when we go to calculate the cost for doing that, it's an entire process. And we have direct labor cost and direct material cost, but we also have indirect costs that get involved in doing all of that as well. So when we talk about a company like that, usually when we're talking about manufacturing companies that manufacture the same thing over and over and over and over again, we start talking about process costs. What's the process in making this item? Okay. Another good example of that would be a company that makes the cans that you buy canned food in. You know, like when Dr. Hessel was teaching in class, he talked about cat food cans, because he worked at a company that made cans where they packaged cat food, and they also made cans for packaging coffee. Well, he would have pallets and pallets and pallets of these cans. Well, you really don't usually start talking about the cost on those jobs as being tied to a specific can. You tie it to the whole process. However, we also have jobs where we tie the cost to the specific job. And a good example of that is a company that makes a luxury yacht. Okay, now they may make 100 yachts in the course of a year, but when you start thinking of a luxury yacht, you start thinking of somebody coming in and buying a specific yacht. And that person that comes in and buys a specific yacht, you may have somebody like Dr. who wants one made out of marble. And well, if Dr. Bittner wants a gold toilet in his yacht, when I'm building a yacht for Dr. Bittner, all of the specific things that goes into making the one for Dr. Bittner, I can tie that gold toilet specifically to his yacht. Does that make sense? So that's kind of where we're going with today's lesson, is how to determine, is it a company that's doing process costing, or is it a company that's doing job costing? Oops. So let's kind of look at it. When you think of it, for job costing, okay, companies that manufacture in batches of stuff where it's specialized, okay, unique products or specialized services. Accounting firms, they're going to do everything that they bill to the job, okay, because if an accounting firm, if there's an accounting firm that's taking care of Calvary University, everything they do for Calvary University, they can charge directly 2-hour account or 2-hour job. Music studios, building constructors, you know, if somebody's building a house, they may be building 5 houses on my block. But if they're building a house for me, the things that go into building my house specific, they're going to job cost. They're going to cost it specifically to that job. It's like, again, I may want Carrara marble for my countertops where somebody else wants butcher block for their countertops. So that can be specifically tied to a job. Okay. And then the jobs that do process costing are ones that do the same job over and over and over again. And they, you know, so the example I used of the company that does plywood, or maybe you got a company that makes surfboards or coffee cans. You know, that they're doing. And that's pretty much it for learning objective 1, is identifying or understanding that we have 2 different costing systems. Okay, so now we're going to get into how to record, and this is, I will tell you guys, this is the part of the class that I like the least as far as teaching it. We are going to talk about journal entries a little bit today, and this is the only time we will talk about journal entries for the entire course. Now, and if and when you get to a point where you take an accounting principles class or you get into other accounting classes, you will get much more in depth into journal entries. Journal entries is the way we make sure, as we're accounting for stuff, that everything balances. The stuff on the left has to balance to the stuff on the right. And I can get the deer in the headlight look just teaching this stuff, let alone trying to be on your end. So, but just bear with me. It's something we have to get through today. Okay. So, but how do we record our materials and our labor for a job cost system? Okay. Now, if you look at these charts, they kind of look like a T. And that's in management, that's usually the type of journal entries we do. We do what's called T charts. Okay. This is a very simple, very basic T chart. Direct materials, direct labor, manufacturing overhead for job 1. Okay, so we're going to move all of those materials now into the work in progress inventory. Well, if it's work in progress, then as it's done, when the work in progress is done, moves from the left side to the right side, it goes over to our cost of a job completed, finished inventory. Where the finished inventory comes into, we were talking about the other day. Some things. So that company that's making all that plywood, when they put the materials and the labor and their overhead into making it, once they're done making it, it has to go somewhere, because this now is balanced. It's got to go somewhere. So it's going to go into inventory. Okay, when it comes into inventory, and I messed this slide up, this red arrow should be coming out of this block on the right side. Okay, because once it goes into inventory, it sits there in the inventory, and then when we're going to move it out, it's going to come out and it's going to come down to our cost of goods sold. But it doesn't go into cost of goods sold until we actually sell it. Okay, now this is the general journal. This is the part that I was telling you earlier that I dislike about it. But it's something that we still have to understand. Let me show you, as we remember, we had direct materials, direct labor, and manufacturing here, and we kind of watched it as it moved through. Okay, well, in our purchasing, because we had to purchase materials, if we purchase direct inventory, it's going to go in our debit column. And if we purchase it, now we have to have a counterbalance or something on the right side, a debit and a credit, Okay, so the accounts payable, if we've purchased it, we have to pay for it. So we have a debit in our materials inventory, and we now have a credit in our accounts payable, because now the accounts payable has it sitting there, and now when they go to pay it, then it shifts for them. Okay, let me see if I can make this slide work. So So we're going to move it from our direct materials. Man, I hate doing these things. You know what? I just skipped a couple of slides, y'all, because that's how much I hate doing them. I'm going to skip them. We're going to get to this part. This is the part that we as management will use, okay? So these same slides back here, this stuff back here we were just looking at, right here. I'm going to show you how it looks on the T slide, and something that really makes sense, okay? So we're going to account for materials. Materials inventory. We purchased materials. Pretty simple, right? We purchased it. It goes to the left side of our inventory. Just think of it when you're looking at these T charts, the left side is what I have. The right side is what I'm getting rid of. Okay? So I purchased materials, so I have it on my left side. Well, if I purchased materials, I now have direct materials on the right side. So this is my inventory, so I have direct materials. Where's that direct materials going to go? Where do you guys think the direct materials is going? Come on. Austin, you can chime in too. Say it loud enough I can hear you.
Manufacturing overhead?
No.
Okay.
but it was a good guess, okay?
So,
Remember, if it's coming out of inventory, we got to work on it first, right?
yeah, that's right.
So we purchase the materials, it becomes our direct materials, and it's going to go into our work in progress. Okay? Well, we also have indirect materials. Remember, we were talking about
You cut out there. We couldn't hear you.
Where do you think the indirect materials is going to go? That's going to go into our manufacturing overhead. Remember, the easy way to remember this, okay, anytime you see the word indirect, it's always going to go into overhead. Okay? So we purchased materials, and all of this materials, okay, is some of it is the wood that's direct material, and some of it's the glue that's an indirect material. So as it comes out of our inventory, we have to know where it's going as far as our cost process. Okay? Does that make sense to you guys? We purchase the material, it comes in bulk, and then we divide it. Direct materials goes into the work process. Indirect materials is going into our overhead accounting. Okay? This is, again, this is something I need to introduce you guys to, but just more so that you understand what it's there. This is a job cost record. So if we have these materials that we purchased and we're going to move it along into the system, how do we keep track of it? Well, that's usually done in some kind of a record. So if this is, materials for Dr. Bittner's yacht, okay, so this job cost record, we're going to say it's job, Bittner's yacht, or, yacht 1, or whatever we wanted to call it, okay? So direct materials, if I'm the guy who's building the boat, okay, direct materials, I've got to go and keep track of what materials have I put into this thing in direct materials, okay? I also have to keep track of my direct labor. How much labor went into working on this, and then
Interesting. Where's it like?
this is the journal looks like. This is what a general journal looks like for labor. Kind of works the same thing. We have manufacturing labor, wages. How much money did our workers earn? Well, we have payroll, which is wages payable. So if I've got $12,000 worth of labor cost here, I've got $12,000 worth of labor payables on this side. I'm assuming all of you guys have had a job at least once.
Yep.
Sadly.
Whether you worked at McDonald's or whatever, so you guys basically know what a time card looks like. That's all this is. Guy started at 8 o'clock in the morning, finished it at 3 o'clock in the afternoon. Total is 7 hours. We pay him $11.25 an hour. That's how much his labor is. And accounting for the labor. So let's go back to our T charts now. Before we were talking about materials. Now we're talking about labor. Well, our total accrued labor is going to be on the left side of this chart. That's our total labor. And then on the right side, we're going to break it out just like we did the materials. We're going to have direct labor, and we're going to have indirect labor that's going to go into our overhead costs. Now, remember we were talking the other day, we're going to leave the lady that pays the payroll out of it, because now we're talking into manufacturing. So now we're talking more like the machine shop I was telling you about, where my machinists, the guys who actually are running the machines and cutting the metal, those guys are going to be my direct labor, and they're going to move into this work in progress chart. Charge, because I can't charge him to a specific job, so he's an indirect cost. So he's going to come down here in my manufacturing overhead. Is that making sense to you still? And we're done with journals. Yay!
Yay.
Kind of, sorta. No, we're not. Unfortunately, we're not. Okay, so recording our overhead costs. So now we have overhead cost in the manufacturing process, and we have overhead costs. Again, we're going to jump past that. So our actual overhead costs are debited to the manufacturing overhead account. Overhead costs are essential to the production. Again, remember we were talking the other day, if we don't account for that overhead cost, when we go to figure out what our total cost is, then we run into a problem of not charging enough and not making the profit we need to, and we're not going to stay in business very long if we're not charging the right amount. Okay. It must be assigned to the specific job to determine the full cost. Okay, and there's a process for determining how we assign it to the jobs, and it's called a predetermined overhead rate. Okay, here's where I'm fixing to make your head spin. I'm trying to figure out how we get this predetermined overhead rate. So a predetermined overhead rate. Total estimated manufacturing overhead costs. So when a company's trying to figure out how much it's going to cost them to do a job, they have to estimate what their overhead cost is going to be. And those estimates are usually fairly accurate because they've done it enough times. They know, like the company that's making the plywood, they know just about how much glue goes exactly on. And they could figure out in a rough sense what their manufacturing overhead cost is going to be. Just like when we were figuring our cost of goods sold the other day, and we said our total expenses divided by how many times we do it. It's the same formula here. We're going to take our total estimated manufacturing cost, that's our expense, our overhead expense, and we're going to divide it by how many times we expect to do that manufacturing base. This will make a little more sense here in just a bit. Okay, so our primary cost driver, a lot of times when we're figuring our estimates, it's what's our total manufacturing overhead divided by how many labor hours are we going to use? Or if we don't want to use labor hours, we might use labor costs. Sometimes we want to get it away from the labor cost altogether, and we might maybe say machine hours. So these are called cost drivers, okay? Cost drivers. Now you're going to see it in a formula. So our allocated manufacturing overhead cost is our predetermined overhead rate times the allocation of the quantity in the allocation base. And you guys are, I know you're like, huh? Okay, so remember we had in our T-charts before, we had this manufacturing overhead was down at the bottom. We still have to account for that in our cost of work, or our work in progress costs. So now this chart that was down here, now we've moved the inventory ones out of the way so we can slide that up. But this overhead allocation is going to go over here. Okay, and I know I've totally lost you guys. It'll make sense when we get back here in a minute to start looking at some actual examples of this. Okay. So our finished goods, ultimately what we're trying to do is figure out what it costs us for our finished goods. So if we take our direct materials, our direct labor, and our overhead manufacturing, that's our cost of goods manufactured. It's not our cost of goods sold, it's our cost of goods manufactured. Cost of goods manufactured goes into our finished goods, into our finished inventory. It doesn't become cost of goods sold until we actually sell it. Now your question is, what makes the difference? Well, the difference now for a while we have to account for it as an item on our books, because it's an asset sitting there on our books. So we can't just simply say that our cost of goods manufactured is our cost of goods sold until we actually sell it. So while it's sitting here, it's our cost of, so the stuff that's in our inventory we calculate as cost of goods manufactured. Now, if we have overestimated or underestimated our overhead when we're trying to do our calculations, what ends up happening is if our actual cost is greater, then if the actual cost to manufacture the stuff ends up being more than what we allocated, then we underestimated or we underallocated. But if our cost is less, then we overestimated. That's pretty simple. So let's talk about this. Let's actually try to apply something that we can put some numbers to and make sense of. Okay. So this is a service company. Now remember, back on the last week we talked about a number of different companies. So we're going to look at this process with the different types of companies. So with a service company, remember we said basically they have no inventory. That Uber driver, okay, he's providing a service. He has no inventory, okay. So the number of the cost for a specific job. Okay, the Uber driver must have drove somebody from New York to Miami because it's a. Come on, where's the humor this morning, guys? Okay. If- okay, and we want to make a 40% profit. That's what markup is profit. Okay, we want to make a 40% for a 40% profit. Well, 40% of 1,000 is 400. You guys know how to get that number, right?
Yes.
You just take the 1,000 times 0.4, and that's going to give you 400. Obviously, if you add the two together, you got $1,400, and this is the price we're going to charge our customer. Cost us 1,000. We want a 40% markup. We're going to charge our customer 1,400. Okay, so assigning labor costs to a service job. This is often service company's large labor costs. Employees keep track of their time cards. Okay, so our hourly rate is our employee's annual salary. Now this says divided by 2,000. It really should be 2,080. It should be 2080. So if you take the annual salary and divide it by 2080, because most employees that work 40 hours a week times 50 weeks comes to 2080. Or excuse me, 52 weeks. This 20 is based on a 50 weeks, but we figure their hourly rate across their annual salary because the annual is 52 weeks. So the annual salary divided by 2080 gives you the cost per hour. Okay, so hourly direct labor cost divided by the direct labor hours. So if our cost, this is a big company. Company's got 2,150,000 $100 an hour, and they may have people that's making $20 an hour. We don't know that. We don't know what each individual employee is making per hour. But we do know that the company has got $2,150,000 in total labor. And we know that is 14,000 hours. Well, if we divide the total labor by $14,000 an hour, then their average cost per hour is $153.57, and I want to work for this company. What about you guys? I do. I want to work someplace that I'm making $153. Obviously, in order to make $153 an hour, somebody's making even more than that. Okay? So, but this is the total labor divided by the total number of hours that it took to get that labor gives us $153.57 an hour. Okay. So now we're getting into the predetermined indirect allocation rate. So let's look at our indirect cost for this example. Okay, our indirect cost for this example, we have office rent. That this company has determined that their office rent is going into their indirect cost. Their support staff is going into their indirect cost, and their utilities is going into the indirect cost. So their total indirect cost for the period is $1,460,000. So if we say our predetermined indirect cost rate is our expected cost, which is this number, divided by our labor hours, okay? So 1,460,000 divided by indirect cost is $104.29. So now we're going to start to put all of this together. Okay, so our hourly rate plus our indirect rate gives us our service. This is a service company still. Gives us our service cost per hour. So we have $153.57 per hour is our labor cost. And our indirect cost is $104.29 per hour. You add those two together, you get to $257.86. Have you guys following with me there? Well, so if we've got the 257.86 times this is what it costs, this is what this company charges per hour for whatever company they're working with. Okay, this is a billable hour because it's got their total labor and their indirect costs tied together. So it's $257.86. That's our per hour cost that we're charging. Well, if we have a company that we're going to bill for 260 hours, now mind you, this 260 hours is just 260 out of that total 1,400. But one company we're charging 260 hours to, the total billable hours to them is $67,044. You guys see how we got to that 6740? Or if I totally lost you and we're way off in the weeds somewhere? It makes sense now, but is it going to make sense later when you're doing your homework is what you're thinking, right?
Yeah.
Okay. So when you go to figuring this stuff out, the slides will be very helpful this week. The book is as well, but the slides will be helpful this week. Dollars that we've got in the labor, right? Now, this company wants to make a 55% profit rate. So if we know this is what it cost us to do their 260 hours, if we want a 55% labor rate, we can take this times 155% or times 1.55. You guys following with me there on how to get that percentage? If you 155%, so they want their cost plus 55%. So if you take this number times 1.55, that's going to give you your markup rate. It's going to come to 103,900, or we would just probably round it off and we would charge that company 104,000. Are we somewhat following today?
Somewhat. Yeah.
Okay, so we're going to stop for just a minute, take a break, let you guys go get some coffee or something, let your brains reset, and then we'll come back into it. So head out now and come back in about 9 o'clock, okay?
Okay. Thank you.
Hey, so Emma hasn't made it back yet, huh? Michaela, you taking a good nap?
There you go. Yes, my nap was good.
Y'all turned the mic off so I couldn't hear what you were saying, huh?
Yeah, I just snore really loud. That's why.
Yeah.
It's loud. My joke.
That's not true. I snored so loud I woke myself up.
Oh.
So, okay. So now you guys get to tell me what we talked about for that first hour. At least hit some of the highlights. Do it without looking at your slides. That's cheating.
I know that we had to go from like manufacturing over pricing. Basically, we were trying to find the sale price of our product. That way we could make profit. Then we had to use all the percentages and all of that to figure that out.
Yes.
Okay. So yes, in a very broad brush stroke, you got it right. Okay. Now we're going to actually go through an exercise so that you guys can see how this actually works. And this isn't on a slide. I need you to open your book to exercise at the back, to the problem in the back of chapter 2. We're going to 2-23. And that's going to be on page 78. Not the back of the book, the back of the chapter. Page 78. And you guys will notice that in doing chapters or in doing the slides, I kind of use this problem. And so you'll understand a little bit more of the slides now that when we go through this exercise. Okay? So this is what the spreadsheet, let me because it'll get real blurry up on that screen. Okay? This is what that blank spreadsheet looks like to fill out. This is what if I were given this to you as an assignment for the class and your homework, I would have given you something that looks about like this. Okay? And you're going to have to fill in all of the pertinent data. So now what we're going to do is we're going to look at this. If I've been able to do this correctly. We're going to look at this. You guys see that black Excel spreadsheet? I made it black so that it kind of stands out a little better. Uh-oh, what's coming up here? Something's coming up on my computer. Something I don't want to see. Go away. It's an amber alert coming up on my computer. Y'all's phones are probably going to go off here in a minute because there's an amber alert. What is Microsoft? What are you doing to me? Go away. I don't want all of this stuff right now. There. Okay, so sorry about that. My computer was going nuts for a minute. Can you guys see that Excel spreadsheet? It's all black?
Yeah.
Okay. Because I always have to.
A little bit.
Say again?
Like zoom in.
Let me.
Yes. Actually, that's not.
I do not want all those numbers in there yet. You're not supposed to be there. Okay, so you guys will be able to see where this is. If you go into files, why is my computer going so slow today? Oops, I'm in the wrong class there. That's why it's not wanting to come up. So now we'll go into files. And then you see this folder here that says in-class exercise? If you click on this in-class exercise, that blank spreadsheet that I was showing you is 2-23 blank. But I'm going to pull this exercise up, and then I'm going to hit the download button so that it becomes a slide. There we go. Now I'm getting there. Okay. Okay. Now can you guys see it? And is it blank on your side?
No.
What? Are you seeing the spread? Can you see my cursor? Are you seeing numbers filled in these blocks?
Oh, not on yours.
Okay, so if you look at the one, so I'm going to walk you through this step by step. Okay, so let's look at what we have in the book. Okay, it says Sims Realtor is a real estate consulting firm. First thing we need to, again, when you're going through story problems, every time you hit something that is a key mark, just kind of stop, make a note of it. It's a consulting firm. So what does that tell us? What type of fashion? No, we were both talking, so it kind of cut out. What did you say?
Oh, we said that you were cutting out. You froze.
Oh, okay. I'm not sure why this is happening today. Can you hear me okay now?
Yes.
Okay. So Sims Realty is a real estate consulting firm. What type of company is that? If it's a consulting firm, it's not a manufacturing company, is it?
No.
Oh.
Service company?
It's a service company. Their service is to come in and consult and do stuff with you, okay? So that's the first thing. So we know we're dealing with a service company now, okay? It specializes in advertising companies or advising companies on potential new plant sites. The company uses a job order costing, so we know that they're going to apply all of their expenses to a specific job. With a predetermined cost allocation rate, computed as a percentage of the labor cost. So remember that one slide where it said there's three different labor drivers for our labor costs, or excuse me, three different drivers for our predetermined allocation rate. It could either be labor hours, labor cost, or machine hours. Okay. In this case, the book is telling us they're using labor costs. So we know that we're going to be using a dollar figure and not a straight, hour number. At the beginning of 2011, managing partner Debbie Sims prepared the following budget for the year. So we're going to look at this budget real quick. 14,000 hours. This is where I was telling you it kind of was related to their rent is $26,000. Their salaries were $85,000. The utilities were $35,000. Okay. So our first requirement for this exercise is to compute the hourly direct cost and the indirect cost allocation rate. So how are we going to get the hourly direct cost? Ladies, can y'all hear me?
You keep freezing up.
Wow. It's freezing up on your end, huh? Okay. So I don't know how much of that you just got. I just read through the story problem. Okay. So our first requirement for 2-23 is to come up with the hourly direct labor rate. Okay. So how do you figure we're going to get the hourly direct labor rate?
Well, the book like has the labor hours and the labor costs, so I'm guessing that you need to divide those.
Okay, but what's going to be our numerator and what's the denominator?
The labor cost divided by the hours.
Correct. Okay. So on my slide, and if you guys actually go to the slide in this thing and you put it in a PowerPoint view, or you put it in a slide presentation, this will go click by click for you. Okay. So we have our total. The hours is going to give us our labor rate. Oops, I didn't mean to click that. Okay, so real quick, well, this is all the information that's in the story problem, right? That's at the top here. I just put it in the spreadsheet. So our direct labor rate is going to be the labor costs divided by the labor hours. So it's the 2,150,000 divided by the 14,000 to give us the 153.57. You guys tracking with me? So this is the same numbers that was in those slides that we did earlier. You're just seeing it in a spreadsheet so that it makes more sense.
Okay.
Okay. So then what was our next requirement? What's 1B?
Indirect cost allocation rate.
Okay. And how did we get that? Do you remember?
Does that have something to do with the support staff salaries?
It did.
Yeah.
So how did we get it? What's the first, if you're going to figure that allocation rate, what's the first thing you have to calculate?
All of your expenses?
All of your indirect expenses. And so if you look at the top of the spreadsheet, that's what we've done. We've taken the rent and the support salaries and the utilities, and we get the 1,460,000. See that?
Yeah.
Okay. So then if now we know what our total indirect costs are. So how do we get our indirect rate?
You take that number divided by the support staff salaries and then get their hourly pay.
Story problem. It says the indirect allocation rate computed as a percentage of direct labor.
Oh.
Okay, so instead of the support staff labor, it's going to be the direct labor cost. So our indirect labor rate is going to be the total indirect cost divided by, and then what are we dividing it by?
If it's not support staff, then it has to be the direct labor.
The direct labor, and remember, it's specifically the direct labor cost, not the direct labor hours, okay? Because it could have said divided by, you know, as a product of the direct labor hours. But in this case, this company's decided to do it by direct labor cost. So we're going to divide the direct labor or the indirect cost divided by the indirect or by the direct labor cost. Okay? So it's our estimated indirect cost divided by our estimated direct labor. In this case, it's the 1,460,000 divided by the 2,150,000. That gives us a 67.9%. That's going to be a key number when we get to calculating later our total, the amount that we're going to bill somebody. Okay? So what's our next thing we have to do? Compute the predicted cost for Maynard's job. Okay? If we go back up here to the inverting several consultants into a bid for a job. Deborah Sims estimates that the job will require 260 labor hours. So since this is a job that we're doing, and everything we're doing is on billable hours. For Maynard's, what do we have to calculate? It says we have to calculate the cost for Maynard's job, right? Well, if we know it's 260 hours, what's the first thing we can come up with as an expense?
For salary.
Say it a little louder.
For salary?
Okay, so the direct labor costs, right?
Yeah.
If we know that it's 260 hours, our direct labor cost is going to be the 260 hours times, and we had already figured out what our labor rate was, right? The $153.57 an hour.
Yeah.
Okay. So that's going to be, so our cost for this job as far as direct labor is $39,928. So what's the next thing we've got to add into this bill? If we've got the direct cost, what's the next thing we have to add in?
I'm not quite sure.
Okay, the next thing we're going to have to add in is our overhead cost, right?
Oh, yeah.
Percentage out right here. So for every hour that we're billing, or for every dollar that we're billing, we have to add 67.9%. So if we take the 39,928 and multiply it by 0.679, that's 67.9%, we get an additional $27,111 we have to add. Does that make sense?
Yeah.
Okay, so once we figure our labor cost, because remember they said everything on this job is done by labor costs. So once we know our labor cost, we can add 67.9% to our total labor cost. So it's that number times 0.67. So then our total cost for that job is $67,039. Okay? So just as you're following down, the next thing it says is, well, this company wants to make a 55% profit. Okay? So how are we going to come up with the 59 or 55% profit? What do you got to do to figure out that profit ratio? There's two different formulas you could use, or two different methods you could use.
Could you take what we just got, the total predicted cost, times 55%?
Okay, so the total predicted cost times 55% and add those two together, and that's how much that we would be billing that company.
Yeah.
Okay, now the other way to do that is you can eliminate a step. Instead of saying this the predicted cost times 1.55 gives you what you should bill. Okay, if you remember in the slide, I used the 1.55 method. Okay.
Okay.
So you can use either method. This is an extra step in it. You don't have to do it. You can do it. Your call. Okay. Does this help make what we looked at in the slides make more sense?
Yeah, it makes a lot more sense just because it all
Okay.
flows together.
It flows together, and it shows you how we take the information from the story problem, plug it into the spreadsheet. Now, the next thing that we're going to do for this class is Professor Dave is going to help you with your homework. You guys ready?
Yeah.
That was a quick answer. And the reason I'm going to do that is because this is that lesson. I figure it like this: if I'm tutoring with you, I'm going to tutor with you using your homework. Because if you were paying somebody to be a tutor, you would pay somebody to help tutor you, get you through your homework, right?
Yep.
So that's kind of this is me being your tutor at this point.
Thank you.
Okay.
We appreciate that.
Yes.
So I'm going to go into the modules. And I'm going to go to assignment 2. This, by the way, will be your shortest class sitting in the classroom for the whole cycle. Okay. Now you see I've got exercise 2.3 right here. This is another way to get to that exercise 2.3.
Okay.
If when you're doing your homework, you kind of get, stumbled up a little bit, you can come in here. And the reason I'm going to help you a little bit with the homework is
I was not cannot remember what you did.
you get through.
Hear us?
I can hear you. Did I freeze up again?
Yeah,
Yes.
you did.
Okay. One of you has it open on the computer, right?
Yeah.
Do you have Austin? Do you have Teams open?
Yeah, I do.
Okay. Let's do this. Let's mute the sound in the classroom. There you go. Mute the sound in the classroom because I think it'll come across Teams better. I think the problem is the system there at Calvary is freezing up at this point.
Okay, hopefully this works.
Oh, whoa.
Okay. You got to turn your speaker, your microphone on. No, excuse me. You got to turn your speakers off on your computer. Now, can you still hear me? Okay, if you can, you're hearing me through the classroom system, right? Okay, that way you can hear me, and that way, because the feedback is in the classroom system. So if you can hear me still good, then let's keep moving. Okay, so I'm going to download this and get it into an Excel file. Okay, so can you hear me? Okay. If you can hear me, then we're good. Okay. So I got this in an Excel file. And I still think what we may find it easier to do, ladies, is it may be easier when we're doing this. You guys in the classroom like that, but it may be easier. Was I freezing up again? Okay. Let's do this. Turn the system in the classroom off altogether and just to work off your laptop for a second, okay? Let's see if that fixes it. And once you get the system in the classroom turned off altogether, you'll have to turn your mic back on.
Can you hear us?
Yes, yay! Okay, so what I was saying is what we may find, I understand you ladies want to be in the classroom, okay? And I'm good with that. But what we may find is it's going to be better for when you guys bring your laptops in, and instead of using the classroom system, everybody just log on to Teams, and that way I can see all of you. You can have your computer open and we can do it, because now I'm not freezing up, am I?
Not
right in
right
this
now,
moment.
yeah.
We'll see if how it goes. I think that's the problem. I think me coming in Teams, because the Teams is then switching to the OBS system in the classroom, and I think that's one of the reasons why it's freezing up so bad. Okay, so we may find it better just to try to do it this way than to try to do it. So can you guys see where I'm sharing this spreadsheet?
Yes.
Yeah, we can see it.
Okay, so, and remember I told you that sometimes you've got two tabs. In this case, last week you didn't have two tabs. This week you do, where you've got exercises, and then at the bottom you've got a problem. Remember that, because what'll end up happening is if you don't, it's going to open up to the problems and you'll do it and you won't do the exercise part. Okay? So let's go back up here. This
Yeah.
Oh no.
Do we tell them?
did it freeze up?
Yeah, really bad.
Wow. Okay. Well, I'm going to go through it, and then you guys can go back and watch the video.
Okay.
Okay. Hopefully the video isn't freezing up.
Okay. Yeah.
So I'm not sure what the problem is. I don't seem to be having problems on my end. So it may just be an internet connection there at Calvary today.
Yeah.
Okay. So anyway, this first problem is just simply going through and identifying whether it is a job cost or a process cost exercise. And just like the one we did last week, you're either going to put job JC or PC in these first couple of blocks right here. Okay. The next one, the order of flow. Okay. Which of these comes first? And that comes right out of your book. Okay. If you go back and read through the book, and that'll tell you right there in the book how to get that information. Okay. So here's the exercise that I want to help you with, because this is the journal entry stuff. So hopefully you guys can hear me and you guys can give me the answers rather than me giving them to you. Okay, so in this scenario, material inventory. So what do you think is going to go in our debit block right here for material inventory?
Do we use the things from above?
Yeah, it's the information that's right above it.
Yeah. Purchase on campus. It would be the 75,000 and the 1,400 added together.
Okay, so this is going to plus this, right?
Yes.
Okay. So what do you think is going to go out here in the accounts payable part?
The same number?
The same number, because if we purchase this much, then the accounts payable department has to pay that much, right?
Yep.
So we can simply say this is going to equal this. And the nice thing about doing that is later, if we came back and we added another line of material in there that we ordered, when we change this number, it would automatically change that number. Does that make sense?
Yeah.
Yeah.
Okay. So now we have, this is our total stuff purchased. So now we're going to move to our work in progress inventory.
Okay.
Okay. So how do you think this is going to break out?
Work in progress inventory.
So our work in progress inventory. So what do you think is going to go in here in our direct materials inventory?
I want to say it's the same thing, but I don't know if that's for sure.
Well, this is the total amount of material that we purchased, okay? But in this case, our material requisition, so the guys out on the line who's making I think this company makes backpacks, yeah. So the guys out on the line that's making the backpacks have come in with a requisition for, instead of $75,000 worth of canvas, they're only requisitioning $63,000. So
Okay.
our work in progress is going to be
The 63,000 plus.
63,000, okay? That.
So it's not the thread too?
Well, think about it. If you're a company that's making backpacks, are you going to buy thread in a quantity that's just enough to make, the specific backpacks? Or are you going to buy thread in a spool like this? It's and you may get one spool, and that one spool may be able to make all 63,000, or that one spool may be enough to make $120,000 worth of backpacks. Okay. So the thread's going to be an indirect cost. So our manufacturing overhead is going to be our thread.
Mm-hmm.
Okay. So if we've requisitioned this much direct material and this much indirect material, then what do you think our material inventory is going to be out here?
It's going to be those two things added together.
There you go. Okay. Now we're still in 2-3, but we're going to take the same kind of information, same type of data, and we're going to put it in this chart. Now I will tell you that in order to get this chart done completely, you actually have to reach down and pull information out of requisition 3, or requirement 3. Okay, so basically 2 becomes 2 and 3. Fair enough?
Yep.
Okay, so let's go back and look. Do we have any beginning inventory in this scenario?
No.
Okay, so that's going to be
The 35,000.
no.
No?
Oh, wait a minute. Yeah, I'm sorry.
You're fine.
So, and you can't come down here and just click that block, unfortunately, because it's not, I didn't type it in that way. So in here, you're going to have to put the 35,000. Okay, so how much material did we purchase?
$76,400 worth.
Oh,
I'll bet this back here.
Where did you put the 35,000?
so what's our ending balance?
Wait, yeah, do we add or subtract those?
Hang on just a second. here's where I get either that question, do we add or subtract those, or I get the statement, we don't know what the ending balance is because we haven't been given enough information. Both statements are incorrect because we're not going to add and subtract these yet. And the story didn't give us an ending balance, but it gave us the information we need to get the ending balance. Okay? So the reality is if we know we've got this much to begin and we purchase this much, we have to add those together, right?
Yeah.
But that's not going to be our balance down here.
No.
Because we used a bunch, didn't we?
Yeah.
So how much did we use?
The 63,450.
Okay, so this is going to equal this, right?
Yeah.
So now to get this, what are we going to do?
You're gonna add those two together.
Going to add this one and this one.
And then subtract
and then
it.
we're going to subtract the amount that we used, right?
Yep.
And that's going to give us a balance of our ending material inventory of 47,950. Okay, and then what I want you to do down here for number 3 is just click in here and say C number 2.
For number 3.
Not sear, C. Obviously me helping with the homework makes it a whole lot easier to do the homework. But does us walking through this process make the journal entry stuff make a little more sense?
Yes.
Yeah, it is a lot easier.
Okay. I think what I'm going to do the next time I teach this class is instead of helping with the homework, I'm actually kind of like the slide we did for 2-23. I'm going to put a problem in and we're going to work through something like that in the classroom.
Yeah.
But anyway, now you got however many points that this one is worth, you got those. Okay?
Thank you.
So let's just talk about 2-7 real quick.
Oh, you just mixed up your numbers. Yeah, it's supposed to be 62. This is the answer.
So remember what I was talking about on the cost of goods sold last week's homework on how I figure it out? Okay? So I'm not going to do the full problem with you, but so let's kind of walk through this one. So Evergreen Furniture manufactures patio furniture. The company reports the following stuff for June of 2011. Okay, and you guys remember I told you at the beginning that there's a newer book for this class. This exact problem is in that newer book, and the only thing that they changed was instead of 2011, they put 2019. But that way they can charge you. That way they can charge you for a new book and charge you more.
Yeah.
Okay, so let's go out here. So this is a company that manufactures wood patio furniture. So is the wood going to be a direct cost or an indirect cost? Uh-oh, you guys froze up on me this time. Okay, you're back.
We're back.
We froze up again. That's the first time everything's frozen on my end this morning. So
okay.
Is the wood going to be a direct cost or an indirect cost?
A direct.
Okay, so I'm just going to put a D in there for a direct cost.
Just over here.
Okay.
Depression on salt, indirect.
What do you think? What's the nails, glue, and stain going to be?
Direct.
Okay, it's used directly in manufacturing it, but do you think we're going to order nails, glue, and stain, in a manner that we can charge it to us? Yeah, that's going to be an indirect, okay? Depreciation on the saw, is that going to be a direct cost or an indirect cost?
Indirect.
Yeah.
It's indirect, and it is the saw, so it's part of the manufacturing process, right?
Yeah.
Okay, but remember, anytime it's depreciation, it will always be indirect. Indirect manufacturing labor, is that direct or indirect?
Indirect.
You'd be surprised people get that one wrong. Okay,
Oh.
the depreciation on the truck,
Indirect.
it's indirect, but is it part of the manufacturing costs?
No.
Okay, so in this case, we're going to put NA in that one
Oh.
because it doesn't apply. Okay, and then the assembly line workers' wages, is that direct or indirect?
Direct.
That's direct labor. So we're going to put direct in there. Okay, so the requirement for this is what is the total manufacturing overhead? So then basically all you have to do is go through and add the indirect cost because that manufacturing overhead. If it's a direct cost, it's not overhead, right?
Yeah.
And if it's a depreciation on the delivery truck, it doesn't apply to manufacturing. So basically, you just got to go through and add those three together. Okay, and then so job 303 indicates the
No.
Okay, so you guys got to calculate this one out. Now let's take a look at the problem and let me see if there's anything in here I think that jumps out at us. Okay, so let's just read through this problem up here. Okay, this problem is very similar to the one that we did in 223, but the numbers have changed up a little bit. Okay, and the requirements are a little bit different. Okay, so Robin Design is a website designer consulting firm. Okay, so it's a consulting firm, it's a service company. The firm does a job order costing. So what does that tell us?
They have to order their stuff. They don't keep it on hand.
Well, job order costing is telling us that they're able to apply the cost directly to a specific job.
Oh, okay.
Okay.
Yep.
Which means they can bill each client differently. Okay. So Robin Design traces direct labor. So you see they've got direct labor hours down here, and licensing costs. They got licensing costs down here, and travel costs. So these are things that they track directly. Okay. So their licensing costs and their travel costs would not go into their indirect overhead because they're tracking these directly to bill to a job. Okay, it allocates indirect job costs based on a predetermined allocation rate as a percentage of labor costs. So again, it's labor costs, so it's going to use the cost, not the hours. Okay, so what you've got to do down here is, first thing you got to do is determine what the indirect allocation rate is. And you can go back to the notes, go back to the slides, go back to the exercise 223. That'll help you. Okay.
Okay.
Then you got to figure out what the total job is. What's the total cost for the job? Which means you got to figure out the right things to add from the direct labor and the licensing and the travel and the indirect costs. So what's the direct cost? And then if this company wants to earn a 20% profit, okay, figure out how to do the 20% profit. And then just give me a quick little blurb down here about why Robin assigns cost to a job, why she uses job costing instead of production costing. Okay?
Okay.
Make sense?
Yep.
Okay. At that point then, if you don't have any other questions, I'm going to stop sharing for just a second. Close a whole bunch of stuff out over here. If you guys don't have any more questions, like I said, today because of the material and the way it's that I have to present it in order to make sure you guys get. I don't give you as long in the class today, okay? If you have trouble when you're doing the homework, whether it's one-on-one or whether the three of you want to get together in a Teams group even and talk with me, I'm fine with that. Okay, but if you have trouble doing the homework, give me a shout. Any of you that are watching the video later, if you're having problems, a couple of you did this week, and I did a Teams call with you and we went over it. As it turned out, both of you had it all right. You just weren't sure of it. But if you're having problems, give me a shout. Send me an email. We'll set up a time and we can do a quick Teams call and we can work things through. Okay?
Okay.
Other than that, I'm going to let you go. You guys have a good day. Have a good week. And I'll see you next week.
Yeah, you
Alright.
too. Thank
Thank you very
you.
much.
Bye.
Have a nice day.
Bye.
Bye.